Hertta, let me begin by asking you, markets here in India witnessing a savage correction, if you could just call it that. In fact, come to think of it, over the last few weeks, we're down almost 12% from the recent peaks. What are your thoughts on just how attractive the Indian market is currently?
Well, of course, relative attractiveness of India has a little bit suffered lately, and I see a few reasons for that. One is, of course, the oil price. It's not 45 anymore. It's 67 and probably going up. So that's hurting a little bit the sentiment. Then also, after very strong stock price performance last year, valuations were looking a little bit stretched. And now when results haven't been so good that many people maybe hoped, so there has been a little bit profit taking. And also, of course, for foreign investors, this confusing issue with MAT, minimum alternative taxation, that has been very, very confusing and hurted sentiment. And I must say that this kind of a retrospective taxes are not really acceptable at all. So all these reasons have affected probably that foreign investors have started to sell the market, and then local retail investors have followed.
Hertta, help us understand how are global investors viewing India right now as an investment destination, especially also in the light of the recent scare among one section of the FIs related to the taxation matter here in India, and also how are you assessing our economy?
Well, I think the medium-term outlook is still good. So we expect the GDP growth will pick up, earnings growth will pick up, and current account deficit is not a problem anymore. Inflation is in control. So India is not part of the fragile five anymore, I would say. And of course, you also have these long-term positives like good demographics, huge potential for emerging middle class and infrastructure spending and all this. So medium-term outlook is good despite these short-term challenges.
Hertta, there's another thought that seems to be emerging, and that is that within EMs, countries like China and their attractiveness has somewhere risen. And so you're seeing a lot of money being pulled out of India and being put into China. Would you sort of subscribe to that? Is that a trend you think that's emerging?
Yes, I think that's also one reason why foreign investors have been selling, because many investors have been overweighting India for the last 1 year, and they have been underweighting China and commodity producers like Russia. And now when China and Russia have had fantastic run earlier this year, so investors have to reallocate their portfolios to not miss that positive development in other markets. So they are selling India and buying China, basically.
Hertta, you're joining us on the show at a time when the Indian government, which the stock markets are very bullish on, is completing 1 year in office. So in this 1 year, how do you rate Indian government's reform approach and the way they have functioned over the last 1 year?
Well, I do believe that this is really seriously reform-oriented government. But of course, expectations were probably a little bit on the high side. And now there is a little bit disappointment that things are not happening so fast than many were hoping for. But I think little by little reforms get done, and that's very good for India. And also at the same time, I would like to see more responsible behavior from the opposition as well. So I think parties need to cooperate at the moment and think what is good for the India in the long run, and not just play any short-term political games here.
IT is one sector which you look at very closely, and that is actually a big beneficiary if the rupee weakens going forward. On the one hand, on the other hand, Cognizant, companies like that have hiked their guidance. Is that one area one should look at on sharp declines?
So definitely IT sector is something we have been covering for a long time, and we have seen a change in the IT software services business, because the old traditional model of just hiring more people to provide services to clients is creaking now. It's not growing, and that is getting reflected in the quarterly growth numbers of TCS, Infosys, Wipro. Cognizant was a breath of fresh air. Literally, it came towards the end of all large cap earnings announcements. And the reason that people reacted positively to Cognizant numbers was the strong management commentary, which seemed to suggest that while they are keeping the people intensive model, now their focus is more on penetrating deeper with their existing clients based on their digital model. So I think unless the other large cap Indian IT companies play catch up to that and pretty fast, they are going to lag behind tremendously. So I would say that there is going to be polarization over next 18 to 24 months in IT company stocks. Not everybody is going to be able to grow. Unfortunately, Indian investors cannot buy Cognizant. It's a US listed stock, but I would say HCL Tech is a company that we are more bullish on in that pack.
Hertta, talking of currencies, how do you see emerging markets and their currencies get impacted in due course? We are already seeing some impact coming in the Indian currency, which is the rupee. In case US actually starts hiking rates in the second half of this calendar, which is being estimated?
Well, this has been already like 2 years when Fed first indicated that they will cut QE and move to more normal monetary policy. So after that, most emerging market currencies have already devalued against the dollar 30% or something like that. So I would say that quite a lot of the Fed hike is already in the price, and it is possible that when the Fed hikes, eventually we don't see any big effect on emerging market currencies. So that's already priced in to most part at least.
Abhay, let's talk about how one should then approach the market. What's your view on banks then? Is that a pocket that you'd be sort of bullish on at this point in time, especially the private banks, given that most of them actually have put out a pretty decent set of corporate numbers?
So private sector banks again have been a very comfortable buy for most of the large investors. However, the valuations are now at levels where one believes that definitely there is going to be returns, but is it better to take that money and invest it in another space within the banking sector? PSU banks, we believe, have got beaten down, and I mean that only for the large cap PSU banks. I'm not going to consider small cap or mid cap banks, private or PSU, as an investment opportunity at all. So in the large cap PSU banks, SBI, Bank of Baroda, PNB, we think SBI has a great opportunity to utilize its 18,000 branches and its sheer scale to transition into a far more profitable bank that is led by strong leadership. It will take some time. It's not going to happen overnight, but maybe a good time to consider adding 1 or 2 of these large cap PSU banks to the portfolio.
All right, people, we'll let you go on that one. Both of you, Abhay, Hertta, thanks a lot for joining us and accommodating this interaction with us today on the show.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.